I have a new tax plan, and I think it's going to save the middle class. It's very simple. We're going to eliminate payroll taxes. We're going to eliminate federal income tax on the first $100,000 of W-2 income, and we're going to eliminate corporate taxes, and we're going to replace it with a few other things that are going to make everything so simple. We're also going to open up the IRS rulebook and rip out thousands of pages. No more write-offs, no more loopholes, no more games, no more BS. Just simplicity that's going to put thousands of dollars in the hands of everyday Americans. The working class and middle class and even upper middle class need cash in their hands. And what are the ways that we can do this? Number one, the cost of living has to come down. But the cost of living can't come down so significantly that we have a crash. Because if the cost of living dropped by 30%, 40%, we have a mess on our hands. We don't want to root for a crash where the whole economy crashes and we're in a recession, people lose their jobs. It's mayhem. We don't want that. But we would need prices to be 30% lower for us to feel like we're thriving. So we can't really root for cost of living to go down. Maybe a little, but not significantly where it ruins everything. And number two, wages need to go up. We need a 50% raise. Let's talk about a utopian world. 50% we need to feel like we're thriving again. How are small, medium, and large businesses going to automatically just give us 50% raise? Not going to happen. Hopefully 5, hopefully 10, 50? Probably not. So what are we left with? Think about this. What are we left with? We have to remove taxes on the first $100,000 for W-2 employees. And I have something for self-employed and independent contractors, small business as well. So we'll get into that. This is what we need to focus on moving forward. So number one, no tax on the first $100,000 for W-2 employees. And that includes FICA. So no payroll. So half of payroll is FICA. So that's 7.65% gone. Federal income tax gone. The only thing you might pay is state tax if you live in one of those states. But federally, no more. So if you make 40 grand a year, you get 40 grand. You make 80 grand a year, you get 80 grand. But we have to make up $5 trillion in tax revenue. So how do we do that? Number one, we're going to implement a 30% flat tax on W-2 income over $100,000. So how does that look? If you make $200,000 a year right now, your first $100,000 tax-free. Your second $100,000, flat rate of 30%, you pay $30K. There's no write-offs, no standard deduction, nothing. You make $200K, you pay $30,000, you're done. In the current system, you're paying between FICA and federal income tax probably $40,000 to $50,000 now. So this plan would save you $10,000, maybe $20,000 a year back into your pocket. So this is going to be really great for folks making $150,000, $200,000, $300,000, and the folks who make $20 million as a CEO, they're going to be taxed 30% as well. So that's $6 million. 30% over $100K for W-2 is going to raise about $1 trillion. So only got $4 trillion to go. Now, number two, this one's a little controversial, but stick with me. A 5% gross revenue tax on all business. So whether you're a big corporation, a medium-sized, a small business, an independent contractor, or self-employed, no more write-offs, no more nothing, but 5% of what your gross sales are. So if you do $1 billion in sales, you cut a check for 50 million bucks. If you're a landscaper that does $1 million in sales, you cut a check for 50,000. If you're a hairstylist that does $200,000, you cut a check for 10 grand. So there's no more keeping track of anything. You can have your QuickBooks just to register all your sales, 200 grand. 5% is 10K. You submit your 200K to the IRS that you made in sales with a $10,000 wire or instant direct payment, and you're done. Taxes take 30 seconds. No more shuffling things around. It's done. And for the big corporations, remember this, no more payroll tax. No more corporate tax. We're just doing 5% off the top. And this would be amazing. It would raise about $2.5 trillion. And I think it would only grow because when people have thousands of dollars back in their pocket, what are we going to do? We're going to invest in these companies and we're going to spend money at these companies. The gross revenue goes up. The tax goes up. We all win. It feels like we're in this together. Now, the one pushback I'm going to get is what about the small profit margin businesses? So if you think about a restaurant or a grocery store, sometimes a grocery store has a 1%, 2%, 3% margin. Some independent restaurants might have a 3 or 4% margin. So if you were to raise 5% to the gross revenue tax, they would basically break even and they would go out of business. So we can't have that. But these small margin businesses like grocery stores or restaurants are going to have to raise their prices by 5 or maybe even 10%. If you were to go to a restaurant right now and have a dinner with somebody and it costs $50, and let's say we implemented this and all of a sudden they raised everything by 10%, your check goes from $50 to $55. $5. It's not that scary. They keep their profit margin. They're contributing to the new system. We pay an extra $5. If we didn't want to pay the $5, we skip the dessert. but it's only $5. And then people say, well, Freddie, that's just the restaurant. What about if you buy a couch? What if you buy this? What if you buy that? Even with all of that, think about it. If there's a $2,000 couch that goes up to $2,100 or $2,200, we're talking a $200 difference. Most people in this system, and I'm going to show you as we go through this, are saving thousands of dollars. If I can save $15,000 and I end up paying an extra $20 for a TV or an extra $5 every time I go to dinner, it's not even close. We're going to be saving so much money. So some businesses that are low margin will raise by 5%, but I think we can handle that and it's going to be just fine. But here's my biggest excitement about this 5% gross revenue. I think it'll start healing the divide between corporations and the citizens. Because we hear record profits, record sales, record profits, record sales, and we don't really feel like we're participating. It kind of feels like we're watching them just run away with the money. If we implement a 5% sales tax on all the gross revenue, we know that if Apple or Starbucks or Target or Walmart comes out with record sales in 2027, 2028, we are all celebrating because we were all in this together. 5% of that is going to go to the government to help. And that's going to raise, like I said, $2.5 trillion. So $1 trillion plus $2.5 trillion, we're already at $3.5 trillion. Now, here's the third one. This one is also very interesting. A 5% federal consumption tax on everything that we buy. There's been people talking about a federal consumption tax, I think recently, maybe for years, but it's always very high because they don't want to do anything else. They just go, hey, let's just do it by 20 or 30%. That's going to be way too high. I think 5% works perfectly here because the 5% would raise about another $1 trillion. So that would bring us up to $4.5 trillion. But here's the problem with this 5% consumption tax. It's going to disproportionately hurt those folks who make $15,000, $20,000, $30,000 a year. Because if someone makes around $20,000 or $30,000 a year in America right now, most of them are not paying federal income tax because of the credits. So they already don't pay federal income tax, but they are paying FICA. And if you make $20,000 a year, your FICA is about $1,500 a year that you're paying. So that would be eliminated. So you would save $1,500 with my plan. But if the gross revenue tax and consumption tax was added to them, $20,000 that they earn, if they spent all that money, a 10% increase in all of this would cost $2,000. So they would be saving $1,500, but this new plan would cost $2,000. So we'd be taking $500 a year from these folks, which we don't want to do. So how do we solve this? Well, we're going to add a one-time a year, an annual UBI payment of $3,000 once a year. And we're going to move it from all the way up to $50,000. So anyone in America that's of working age that makes $50,000 or less is going to receive a one-time annual $3,000 UBI payment. And this includes if you're working part-time, if you're not working, if you're on disability, if you're pulling from Social Security or retirement, anything $50,000 and below, you will receive a $3,000 annual payment. Why I think this is important as well is we're going to move towards UBI payments in the future anyway. Why not get this started now and put cash into people's hands? I think this would be great. But why $3,000? Well, here's why. Because like I said, someone making $20,000, if they raise prices by 10%, it would cost them $2,000. They would only save $1,500 on FICA, so they would lose $500. Putting $3,000 into their pocket a year would actually net them $2,500. So folks are making $2,500, and it just continues to grow the more money that you make. So this way, everybody wins and everyone can move forward. And like I said, that would raise about $1 trillion. But there's a caveat to this. It would also cost about $300 billion to do this UBI payment. So that $1 trillion will go down to $700 billion. So that's where we're sitting right now. And my last step is going to be capital gains. I think we need to leave capital gains tax exactly how it is. That raises about $200 to $300 billion a year. Let's be generous and say $300 billion. So between all of these steps, we now have raised $4.5 trillion with this new system, thousands of dollars back in the hands of everyday Americans. It simplifies the system, no write-offs, no games, no bullshit. And here's how I think we make up the extra $500 billion. I think with all of this money back in the hands of Americans, what are we going to do with the money? We're going to invest in these companies. We're going to spend money at these companies. And so the consumption tax revenue is going to go up. The gross revenue sales tax is going to go up. And I think over time, we'd be able to make that up. And if government could cut their spending a little bit, we'd be able to kind of meet in the middle. But I think this would work. But Whether this has some potholes in it, I know that it's not perfect, but I think it's how we need to start thinking. And it isn't my ideal, but I'm trying to be as realistic as I possibly can, because I'd like to say, oh, let's just do this, let's just do that, but it has to be passable. I think these 4 things could be passable. And I think it's fair. I think this would work. I think it would save the middle class. And here's my last little point as well. The American dream was all about starting from humble beginnings or coming to this country, starting with nothing and building to a middle class or upper middle class or maybe even a rich lifestyle or upper middle class. Right now, it's all fragmented. Somebody who's living in poverty, who's working very hard, you want the middle class to be a place to celebrate, where they're busting their ass and like, I'm finally middle class, and middle class in America is thriving. This was worth me climbing to the middle class. You don't want the middle class to suck, where people in poverty or lower income are like, yeah, this is worse here, but even the middle class fucking sucks. The middle class should be a launching pad where you're like, I can invest, I'm debt free, I can have a car that's not 30 years old, but it's 7 years old. I can have a place that has central air and a washer and dryer in my unit. I actually have a chance to save for 2-3 years and buy a house for me and my family. This is where we start. I think this would be a great tax plan. I'm curious to hear your feedback in the comment section. I really appreciate you stopping by, and I'll see you next week.